Hi, I'm Joe DeLisi, and this is the Joe DeLisi Financial Advisor Podcast. All right, let's talk about the war. Not an official war. You can call it whatever you want to call it. To me, it's a war, and obviously with the regime in Iran and the shutting of the Strait of Hormuz. I don't even know how to say it at this point. I've heard it so many times. I don't even know how to say it. Okay, well, everyone knows what I'm talking about. And the increase in oil and the reduction of the stock market and just kind of all the scary stuff that's out there. I follow politics like I follow sports. I enjoy it. I like to pay attention to it. That makes me kind of a nut. But I do pay a lot of attention. That being said, I'm not an expert in politics. That's not my job. My job is money and markets and investing and taxes and long range planning and debt and savings. That's what I do. But I can look at what's going on and then look at the reality in the markets and make some correlations or draw some correlations to it and kind of explain what's going on. So I have some very good news for you today. I have no idea how we're going to wind up the year. I don't predict the future. Like I've said a million times, if I could predict the future, I wouldn't tell you. You'd never know who I was. I would just have $1 trillion because I'd be able to go trade on that predictions of the future and have all the money. And nobody who tells you how the year is going to end up or what's going to happen with the war, nobody knows. Nobody knows. Nobody can predict the future. So we're just going to accept that as a fact. Okay. Here's what I can tell you. Just like we said, I'm going to little pat on the back here. Again, not a prediction, but just like we said, when I think it was Monday after the war kicked off, I don't remember when the war officially kicked off. It was over the weekend because I remember we were on spring break. And if you watch the podcast, you could tell that we were obviously in Florida. And I commented on it. And the data I got, I just simply said, look, wars don't make your stocks go to zero. Wars are scary. We don't want war. We want stability. Geopolitical stability is important. But you're going to get some red typically right away when a war is kicked off, and then it quickly comes back. And that's just been the case over almost every military conflict that we've looked at. I could go back to World War II. I could go look at the first Gulf War. It really doesn't matter. And so we said in that podcast, you're going to see some red. And then no matter how long or how short the war is, those red numbers are going to turn green. And it's not going to be as long as you think. Again, without predicting any time period. Well, I want to give you an update. Where are we? So right now we're early April, right before tax filing time. And so we're doing a lot of our reviews with clients, a lot of annual reviews, and people are coming into those meetings and they're like, oh, I haven't opened up my statements. I don't want to look. And I'm like, well, then I got some pleasant surprises for you because your portfolios are not in bad shape. So I want to give you some updates and some numbers. If you're a client of ours, this will be very beneficial to you. If you're not a client of ours, I don't know why you're not. I'm not kidding. No, I mean, call us, right? Because if you're interested in investing and building balance sheets and financial planning and you're concerned, or maybe your portfolio is down, just give us a call. Let's just take a look at this thing and see what's going on. But here's some numbers I can give you year to date. This is all from Yahoo Finance on the Yahoo Finance app. If you look at the S&P 500 year to date, it's down about 1%. Joe, I thought you said there's no red. There's some red. Portfolio wise, there's not a lot of red to be had. So, and actually, if you look at our portfolios on your U.S. money, the S&P 500 is almost your smallest percentage of where we have your money. I think micro cap U.S. is maybe a little smaller, but we heavily overweight to U.S. small value. That even in the large cap area, we're looking for value, value stocks. So U.S. large growth, which is what the S&P is, that's not a very large percentage of your money. Now, we had to defend that with statistics because the last 5 years, heck, the last 7 years, if not longer, except for maybe the last 18 months, the S&P has been the clear winner. So that's what a lot of people's portfolios are in. That's what a lot of people are chasing, a lot of NASDAQ tech kind of stuff. Well, that is down about 1% year to date. But here's some other numbers. Again, from Yahoo Finance. If you look at U.S. small value, okay, so we're looking at the dimensional funds U.S. small cap value. Year to date, early April, is up almost 9%. So the S&P is down 1. U.S. small cap value is up almost 9. Again, your portfolios, if you're with me, it doesn't matter if you're in 95% equities or if you're in 25% equities, whatever equity position that you are in with me, we are heavily tilted to small and value. And we don't change. We're not market timing here. This isn't like, oh, we're so smart and we're going to switch it. No, we've always been like this. This is how we build your portfolio, because we're looking at over very long periods of time and where risk premiums exist. So that's turning out very well this year so far. Now, let's look at some other ones here. So if we look at international small cap value, so I just gave you the U.S. Small cap value year-to-date return was almost 9. International small cap value, the same fund company, Dimensional Funds off of Yahoo Finance, year-to-date early April, up over 7%. And this story, I mean, I could go through the list. This story is going to continue down the line. So if you look at large growth, that tends to be red for the year, whether it's international, emerging, or U.S. If you're looking at small growth, small value, micro, emerging, international, all those categories are up, and they're up significantly. So it could very well be that the S&P 500, while down 1% year to date, if you're in an allocated portfolio, I'll just speak to the 95% allocation just, for ease. That portfolio early April, you're probably up somewhere in the ballpark of 7 or 8%, maybe even a little bit more. And if you annualize that number, you're on track for about a 30% rate of return year. Do I think you're going to end up with 30%? I have no idea. Again, I don't know the future. I can't predict that. I'm just telling you what you're on track for. The reason I'm doing this is because these numbers are very, very good in light of the fact that we've got a war with Iran going on, and the Strait of Hormuz, however we say it, shut down. In light of those things, markets are fine. They're doing quite well for you if you're allocated. You're an allocated investor, if you've built them according to math and science. That's really instructive. Because again, we've talked about this before. The economy we could be in a recession and your markets could go up. Your stock investments could go up. We could be in high taxation and your portfolio might be up. We could be in the time of war and your portfolio can be up. The reality is, if you just look at the S&P 500 as an example, on average, if you go back to 1926, 3 out of every 4 years on average are positive years in the S&P 500 stock market. So most of the time, 75% of the time, you're going to be positive. It doesn't matter what's going on in the world. And so that could be, we're in an AI bubble, quote unquote. It could be that we're in the middle of a war. It could be that we're in the middle of a weird presidential election or a midterm election or whatever. You're always going to be sold this concept that this time it's different. And I'm just here to tell you, it probably isn't. It doesn't mean you're not going to have a bad year. It doesn't mean that you're not going to have years where in the middle of the year, the markets go down and then rebound. All these things happen. But rely on us, right? Let us worry for you. Call us if you have questions. Let us run through the numbers with you. But the reality is, if you can stay disciplined, and it's part of my job to help you remain that way, you're going to do quite well long term, even during scary time periods like now.
Joseph DeLisi is a registered representative and financial advisor of Park Avenue Securities, LLC, OSJ 5280 Carroll Canyon Road, 300 San Diego, California, 92121-619-648-6400. Securities products and advisory services offered through PAS, member FINRA, SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Westpac Wealth Partners, LLC is not an affiliate or subsidiary of PAS or Guardian. Insurance products offered through Westpac Wealth Partners and Insurance Services, LLC, a DBA of Westpac Wealth Partners, LLC. CA insurance license number 0D34103. This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Guardian and its subsidiaries do not issue or advise with regard to mortgages, property and casualty insurance, and/or car insurance. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. Diversification does not guarantee profit or protect against market loss. Equities may decline in value due to both real and perceived general market, economic, and industry conditions. Investing in securities of smaller companies tends to be more volatile and less liquid than securities of larger companies. Investing in the bond market is subject to certain risks, including market interest rate, issuer credit, and inflation risk. This material is intended for general use. By providing this content, Park Avenue Securities, LLC, and your financial representative are not undertaking to provide investment advice or make a recommendation for a specific individual or situation, or to otherwise act in a fiduciary capacity. Past performance is not a guarantee of future results. Indices are unmanaged and one cannot invest directly in an index.
888-639-5.1 expires April 2028.